Well, let's just move on then and connect with the management of IndiaMART here to talk a little bit about what exactly has kept the stock abuzz of late. Remember, in the last 5 days, the stock has been gaining quite smartly. Since its listing, it's up about 42%. We'll be talking about the mix of services and goods, the numbers of registration, and the B2B segment, whether or not we're seeing a slowdown impact. Dinesh Agarwal is the founder and managing director with us on the phone line. Thank you so much for joining in, Mr. Agarwal. Let's start off by talking about the B2B demand scenario. What exactly has it been like on account of the broad-based slowdown? Have you too seen an impact play out?
So yes, obviously there is a broad-based impact on everything that we can see across the nation. However, given that IndiaMART is a subscription-based business, and where our customers take subscription for 1 year, 2 year, and 3 year period, apart from monthly, we are a little insulated from the slowdown. If the slowdown recovers quickly over the next quarter or so, I do not think we will be affected. But yes, there is a buyer demand which is stagnant over the last 3-4 quarters.
Okay, so as of now, things have been a bit stagnant. Do you think that we are likely to see a pickup coming in anytime soon? Give us a sense as well what exactly your overall market share is and what, the number of the registered buyers that the company currently has.
So currently we have 88 million registered buyers and about 5.6 million suppliers, displaying about 62 million products and services on IndiaMART. On a monthly basis, we do about 38 million matchmakings between buyer and seller every month. So these are the numbers on the KPI side. In terms of revenue, we did about 161 crores of total revenue, including other income. And in terms of EBITDA, we did about 33 crores of EBITDA, 33 crores of EBIT, and 38 crores of EBITDA last quarter. And we are growing healthily at between 25 to 30% for the last many quarters. We believe that if the economy slowdown improves, we will continue to maintain that. And we'll see if we have also done a investment in a mobile-based GST invoicing cum accounting software for SMEs, which is called Vyapar app. So we have recently announced an announcement in that, and we have taken about 26% equity in that app also. So we'll continue to increase our focus on enabling MSMEs technologically by way of SaaS products such as website management system, lead management system, and now accounting and billing management system.
Okay. So highlight for us then whether or not you are actually seeing your overall registered buyers increasing going forward. You spoke about the current number that you're sitting at, but what is the pace of growth? What is the kind of market share that you're aiming?
So since there are not many players in the particular segment, a study done by KPMG in 2017 pegged our B2B classified market share, which is about 60%. And now we are running in 2019-20, so we don't have any market share study as of now, but we continue to lead in our segment, and buyers growth has been about in the similar range of 30 to 35%, whereas paying supplier growth has been in the range of 15 to 20% over the last so many quarters.
Okay. Until a few years back, we'd seen B2B e-commerce startups failing to make a dent in the unorganized market. How have things changed now, especially since demonetization, GST, etc.?
So I would rather say that adoption of mobile internet has made a wider impact on the entire internet ecosystem and entire online ecosystem, whether it is B2C or B2B. Also, GST has made it simpler for across the border, across the state border trading. So that has helped. Demonetization and GST obviously had a temporary impact of 2 to 3 quarters on slowdown. However, GST continues to have a long-term good outlook of improving formalized economy and Jio as well as the internet mobile penetration over India, now about 500 million internet users. And if you see our traffic, we get about 50 to 60 million monthly visits on our platform. That's like 5 to 10% of Indian internet population visiting IndiaMART every month. So I think our focus on sellers and products and variety of the products that are available has gone up significantly over the last 3-4 years, as well as the buyer's interest, which has gone up.
Fair enough. And give us a sense on your financials. What are the initiatives that you're taking to lower your cost and sustain profit expansion? Where do you see your margins headed?
So, in the last couple of years, our top line has been growing around 25 to 28%, and whereas our expenses have been growing at 17 to 18%, and which is resulting into a continuous EBITDA margin expansion. So, if you we have entire quarter-on-quarter financials on the website also, and you will see that there's a continuous margin expansion happening. So, last year same quarter, our EBITDA margin was about 11-12%, which has increased to now 26-27%.
Joining in, Mr. Agarwal, and sharing with us your outlook on the B2B demand scenario, as well as the recent Vyapar stake purchase, as well as your financials. That's a word coming in from the management of IndiaMART, but let's get a move on, and a programming note for all of our viewers.